Hello and welcome to TA for Traders. It's Thursday the 9th of June. I'm Nigel Croft. In this short video we'll be looking at the charts of the dollar against the Swiss franc, so the Swissy. What we'll see is that after the dollar weakness that we've seen, there are now signs that perhaps we're going to get a bounce. We're seeing a non-confirmation on the RSI of both the daily and the 4-hour charts. And on the weekly chart, we'll see that we're at the bottom of a long-term trading range, and it'd be no surprise if there was a bounce from here. So here we are on the daily picture. So each candle represents 1 day's trade. We have become slightly overextended away from the moving averages, although they are moving downwards and will be a resistance factor on any rally. However, to the positive, the RSI, which has indicated a non-confirmation, that's where the RSI doesn't go to a low when the market goes to a low. So if you can see 2 to 3 days ago, we had a low on the market about 96.15, but there wasn't a corresponding low on the RSI. It's kind of starting to create a small uptrend, starting to indicate a bit of positive momentum coming into this market. Likewise, the MACD has started to turn round. The short term now back with the long term. They're both tracking sideways. They will start to turn up as well. How far will the rally go? Well, it'll get immediate resistance from at least the 20-day. There is another resistance line that I'll show you on the 4-hour, but at the 20-day 97.49, that will be resistance. Also, this point here, which was the high of the 30th of May, which is about 98.98, that will be a resistance factor as well. So the rally may go up to there, consolidate, and if it's then going to continue, if the momentum has built up, you then would see a rally up to 98, probably up to near the 50-day, which by then will be about 98.55. Presently the 50 days at 99. On the weekly chart, here you can see that we're coming down into support. There's a lot of support to where we are presently from last August, last June, and then in April. And what you can say is that that's the bottom of the trading range. You can see that there's solid resistance up at the 103, which has held the market on several occasions, and this support line about 95 is the bottom of the range. So we're near the bottom of the range. That would, a lot of people will be looking at these support levels and thinking, well, the downside, if the support holds, the downside is limited, therefore let's take a position to the upside. Again, though, on any rally, you will be seeing a resistance. You can see that the 20-week moving average is about to cross the 50-week moving average, moving downwards, which will be a bearish factor, although they are quite a bit up from the market at the moment, above 99. Moving on to the 4-hour chart, and here as well, we've had a non-confirmation on the RSI. You can see that the low on the RSI, which was a couple of days ago, wasn't the low. So the low on the market a couple of days ago wasn't the low on the RSI. That's now creating an uptrend. It's also gone back above 50 at 54.71, indicative of positive momentum. And also the MACD have started to shout out a buy signal as well, as the short term goes above the long term. Here there is a short-term resistance in the 54-hour moving average is tracking down. That's 96.90 and will cause initial resistance. On this chart, you'd want to see these resistance points at 97.20 being broken, which will break the pattern of lower highs. Quickly looking at the support resistances. So we've got that 50 on the 4-hour, 96.90. Then the 20-day, 97.48. with supports at 96.14, and then that 200 week giving support at 95.47. So that's been TA for traders, having a look at the Swissy. I hope you found this video of interest. Please remember, these videos are for educational purposes only and not meant as an investment recommendation. And please do read the disclaimer. Thank you.